Hey everybody, welcome to Mortgage Today for Thursday, April 11th, 2024, and oh, what a day it was. We were hoping for a bounce back today, and we did not get it. UMBS were down 4 basis points after the first hour of trading this morning, and only kind of got worse from there. Inflation at a wholesale level rose 0.2% in March and 2.1% year over year, according to the Producer Price Index. If you strip out food and energy, the index rose 0.2% month over month and 2.4% year over year. While not a disaster like the CPI report yesterday, it isn't helping the cause, and the 10-year got smoked again early this morning. We also got FOMC minutes from yesterday that were digested, and the FOMC meeting and the minutes from March did indicate rate cuts were in the near future. While they did note that there might be some seasonality involved in the inflation numbers, the message was steady as she goes. That was before CPI and PPI, though. In addition to the hotter than expected CPI print, we also had a pretty lousy 10-year bond auction. The bid to cover ratio was an anemic 2.34x, and dealers were forced to buy 25% of the $39 billion issue, which pushed 10-year yields to 4.56. Needless to say, mortgage banks got roughed up yesterday, with Rocket down 13%, UWM down 7%, Loan Depot down 5%. Mr. Cooper held up reasonably well due to heavy MSR exposure. Between all three hawkish events, the Fed Fund futures moved decisively towards higher rates, with the June futures pricing only in a 17% chance of a rate cut, and the December futures pricing only one cut this year. Check out the probabilities from a month ago. Markets saw 100 basis points in cuts. Anytime we have a huge day of movement, regardless of reason, the odds of a bigger movement increase the following days. Anytime we have a huge day of movement, regardless of the reason, the odds of bigger movement increase in the following days. Today was especially tense because there was another inflation report that stood the chance of adding insult to yesterday's CPI injury, but today's PPI came in right in line with forecasts, and Today's PPI came in right in line with forecasts, and bonds subsequently enjoyed a mostly sideways trading day, at least relative to yesterday. Looked at in a one-day vacuum, there were swings of more than a quarter point in MBS in both directions. Lenders were clearly geared up for such things, considered how the lower than average price. Lenders were clearly ready for it because we saw a lot of reprices in both directions. UMBS closed the day down at 13 basis points at 99.56. The 10-year closed the day at 4.581. I remember it wasn't that long ago that we had a 4.32 line that we had troubles breaking through. Now we've handily beat through it. But look at all of this movement today. So starting out at 99.65, we dropped down 10 basis points, came all the way back up to 99.83-ish, all the way down to 99.5, all the way back up to 99.8, before trickling all the way back down to rest at that 99.6-ish number. So that is a lot of movement in both directions for one day. But looked at on a longer perspective, we have this kind of crazy thing going on here where all of the technicals have converged upon each other, though it doesn't completely matter because our price is all the way down here. So we are well below that closest trend line, which is the 200-day moving average at 100.104, and it rested pretty much dead on that Fibonacci line at 99.647. So hopefully we can get some movement back up this way.